If the United States government ever stopped paying its debt, the world economy would implode in less than 48 hours. Banks would freeze, markets would vanish, and every dollar in your wallet would suddenly mean nothing. Welcome to Economifics, where money, power, and history collide, and nothing is ever as simple as it looks. Because what we call US debt isn't just a number on a spreadsheet. It is the foundation of modern civilization. It's the invisible architecture that holds up everything from your mortgage, to the price of bread, to the global balance of power. And if that structure ever cracked, it wouldn't just be an American problem. It would be a global collapse of faith. The end of the financial world as we know it. But before we imagine the fall, we need to understand how we built this tower in the first place, and why the richest nation in history is also the most indebted one. It started in 1790. A young nation, fresh from revolution, was drowning in war loans. The new United States owed money to soldiers, citizens, and foreign allies. Most countries would have defaulted. Instead, Treasury Secretary Alexander Hamilton did something no one expected. He embraced the debt. He argued that if America could borrow and pay reliably, it would prove itself trustworthy. A safe bet in a world of broken empires. It was a radical gamble, to build a nation's power not on gold in a vault, but on the credibility of its promises. Hamilton's gamble worked. The United States began issuing bonds promises to pay and honoring them. Investors bought in. Confidence grew. In Europe's markets, American debt became a premium product. The new republic didn't just win its freedom through war. It financed its future through faith. That faith became the foundation of U.S. power. Every major era of growth, the railroads, the Industrial Revolution, the New Deal, World War II, was financed through borrowing. Debt wasn't a sign of weakness. It was the engine of expansion. By the mid-20th century, that engine was running the world. In 1944, at the Bretton Woods Conference, with the Second World War still burning, 44 nations gathered to design a new economic order. They made a simple choice that changed history. They anchored the global financial system to the US dollar and the dollar to gold. That meant every major currency now depended on America's promise. After the war, the United States held 2/3 of the world's gold reserves and half its industrial output. Confidence in the dollar was absolute. Foreign governments stored dollars as reserves. And when they wanted to invest safely, they bought US Treasury bonds. The American debt became the world's savings account. But nothing built on faith stays stable forever. By the late 1960s, the U.S. was fighting an expensive war in Vietnam while funding massive domestic programs at home. Dollars were leaving the country faster than gold could back them. Other nations, led by France, started demanding the metal instead of the paper. The Treasury's vaults began to drain. Then, in 1971, President Richard Nixon made the most consequential financial decision of the century. He severed the dollar's link to gold. Overnight, money was no longer tied to anything physical. Its value depended entirely on confidence and on the U.S. government's promise to keep paying its debts. That promise created what we live under today, the debt standard. Gold no longer backed the dollar. The world's trust in U.S. treasuries did. It was a quiet revolution. For the first time, the United States could create infinite credit as long as the world kept believing in it. Treasury bonds became the safest asset on earth, not because they were risk-free, but because everyone agreed to treat them that way. Banks used them as collateral. Pension funds relied on them for stability. Central banks filled their vaults with them. When you hear about the national debt, you're not hearing about a bill to be paid. You're hearing about the core infrastructure of global finance. Every loan, every derivative, every credit card interest rate sits somewhere on top of U.S. government debt. And the system depends on one simple ritual. When old bonds mature, the U.S. issues new ones. It never truly repays its debt. It just rolls it over, forever. As long as that process continues, the illusion of stability holds. But if that chain ever breaks, if the government misses even one payment, the illusion shatters instantly. US Treasury bonds are the collateral that underpins the entire global banking system. If they're not guaranteed, banks can't lend, hedge funds can't borrow, and the world's financial plumbing would cease instantly. Stock prices would plunge, not because companies stopped making money, but because the very foundation of valuation future stability would vanish. Then the panic would move outward. Foreign central banks that hold trillions in US debt would scramble to protect themselves. The dollar would collapse as investors flee into gold, euros, or even crypto, anything that looks certain. Interest rates would skyrocket. Credit cards, mortgages, car loans, all would become unaffordable overnight. Within a week, the US government wouldn't be able to pay soldiers, Social Security checks, or healthcare bills. Within 2 weeks, the entire global economy would be in cardiac arrest. And yet, the real story isn't about numbers. It's about faith. Because the US doesn't just print money, it prints trust. And if that trust breaks, there is no central bank on earth big enough to fix it. Every empire in history has faced this moment. Rome had its denarius. Britain had its pound. And both discovered the same rule. A currency lasts only as long as people believe in the empire behind it. When that belief fades, even the strongest metal turns to dust. In America's case, the collapse wouldn't start in the streets. It would start in the data, in trading terminals, in interest rate spreads, in the quiet panic of central bankers on encrypted calls. And then it would spread to everything else. Pension funds losing value, companies missing payroll, governments cutting ties with a dollar they no longer trust. The entire global economy would begin to decouple from the United States, not out of anger, but out of survival. Some might imagine China or another power stepping in to replace the dollar, but it wouldn't happen that fast. Trust takes generations to build and moments to lose. The world wouldn't find a new reserve currency. It would enter a period of chaos, where every transaction costs more because no one knows what anything is worth. That's what default really means. Not the end of money, but the end of meaning. The irony is that this disaster wouldn't happen because America ran out of cash. It would happen because it ran out of cooperation. The US could pay its bills in a second. It controls the world's printing press. But if political paralysis blocks that ability, if ideology overrides function, the result is the same as insolvency. Confidence doesn't care why the check bounced. We've already seen the early warning signs. In 2011, when Congress nearly refused to raise the debt ceiling, global markets lost trillions in days. The US government's credit rating was downgraded for the first time in history, and it still hasn't fully recovered. In 2023, another standoff pushed the Treasury to the brink again, forcing emergency measures to keep the lights on. Each time the world blinked, and then pretended nothing happened. But faith doesn't reset. It erodes. Meanwhile, interest payments on the debt are now approaching $1 trillion a year. That means the US spends more servicing old promises than it does building new ones. The math no longer looks sustainable. And yet, the real problem isn't the debt itself. It's the complacency. The assumption that the system will always renew itself, because it always has. History says otherwise. In the late stages of every empire, money stops being a tool and becomes a substitute for trust. Governments print, borrow, and spend to postpone decline until the illusion becomes too expensive to maintain. The currency weakens, inflation rises, and finally, the world moves on. The United States isn't there yet, but it's walking the same road Rome once did, paved with credibility instead of silver. A US default would mark the end of an era, not because the numbers stop adding up, but because the story does. For 80 years, the world has believed that the American system, its laws, its institutions, its dollar would outlast any crisis. That belief allowed nations to trade, invest, and save in peace. If that belief dies, what replaces it won't be a new order. It'll be noise. If you are ready to continue decoding the financial myths that shape our world, subscribe to Economythics and click the notification bell.